commend you for securing time to be with us here. As mentioned by Ms. Nyakinywa, my name is Sheila Afande, and I'm the CEO of Financial Wellness Center, as a company that is focused on helping entrepreneurs and individuals learn to manage money, as well as be able to attain their financial goals easily without having to break their backs. So as the topic for the event today is money management tips for entrepreneurs, I assume most of us here are maybe entrepreneurs, or you're planning to start a business maybe later on, especially with the ongoing pandemic that has made everyone to become an entrepreneur. So we are going to discuss on the money management tips that can help you become a smart entrepreneur, as well as strategies that you need to ensure your business is growing, or if you already are in business, to scale up your business. So before we can go in to today's topic, you can find me on Facebook, Financial Wellness Center. You can also find us on our Instagram account at Financial Wellness Center, as well as you can get to acquire money skills at your convenience by watching videos on our YouTube channel, which is Financial Wellness with Sheila Mboga. As well, we have the same page on LinkedIn, where we constantly post things to do with money and give you real-time updates. So I see we have an amazing chat box with us. So I would like you to share with me, have you ever used a financial management system for your business, or if you are employed, wherever you're employed, do you use a financial management system? Let me know in the chat box. So as you continue to answer that, I would go ahead and define what's a financial management system, because you've heard a lot of people telling you you need a financial management system for your business. Your business is not doing well because it doesn't have a financial management system. So what is it about? Basically, this is a system that is made up of both software and strategies that businesses can use to supervise and manage all finances, including income, expenses, assets, and with the goal of increasing profits and maintaining steady income. So a financial management system, basically, as I mentioned, it is a combination of softwares and strategies that are focused on helping the business to grow, as well as achieve brand preference in the marketplace. I always say, when you get into business, the most important thing is being able to gain market loyalty. Market loyalty is what will keep your customers coming again and again, and it is what will attract other people to come. So without a proper financial management system, you may not be able to gain loyalty of customers, because you will not be able to create strategies that are in line with the market. So a financial management system consists of a data dashboard. In a data dashboard, this is where you see all financial activities simplified. You are able to see graphs, you are able to see real-time data, like how many calls you've received in a month or a week, how many people have communicated to you via WhatsApp, via email. And sometimes with this data, you are able to know maybe your customers are more on Facebook, so you need to be more active on Facebook, or maybe your customers are more on Google My Business, just as Pastor Ken has shown us how to create one. I actually created while he showed us. I believe every entrepreneur has done it. So once you have data, you are able to go where your customer is. And I always say a very good example is every time you log in Facebook, maybe if a few minutes ago you were Googling maybe salon near my place, immediately you log on Facebook, you start seeing adverts of salons around you. So basically, it means this salon, they've used the data they got, and they're now going where the customer is, which is on Facebook. And then with the same data dashboard, you are able to see projections. You are able to forecast. And forecasting for a business, no matter how small or big it is very important. When you project for your business, you are able to prepare in advance for calamities. Now, we have high seasons and low seasons in business. Now, if you do not have data to help you project, for example, if last year you are able to have data and you are able to tell, my business in the month of November, it makes profits compared to the month of May. So this year, what you will do with that data is you'll try and ensure you are saving money to cater for May, when the business is low. Because when the business is low, you still have expenses to pay. You still have employees to pay. So how will you do that? You need to have a cash reserve to do that. Then the other segment, as I said, is real-time data, and that is real-time data is basically the immediate information you get. Like I always see on Facebook, weekly they give you an update of your analytics, and you need to check the analytics. What is going up? Maybe there's an advert you placed, or maybe there's a post you made. For example, you could have made a post saying that you have an offer. Then on Monday, you say you have an offer on Monday. Then on Tuesday, you make a post saying maybe just anything about your business. Then you find when you check your analytics, the post with the sale offer has a higher reach, and the one with just other details about your product has a lower reach. That basically tells you the customers are more interested in sale discount. So as a smart entrepreneur who has attended this webinar, what you do is now you will introduce a sale offer based on the real-time data you got. That is just for Facebook. I believe when you get better a real system in place, like QuickBooks, if you're not able to get QuickBooks, there's another one that's called FreshBooks, and that is so easy and simple for anyone. So take advantage of these softwares, not just for accounting purposes, but as well to be able to get real-time data. Now, the other segment is the tracking. Now, tracking basically involves invoicing, expenses, investments, profits, as well as return. That falls under investment. I wanted to say return on investment. So your system should show, like, invoicing is in terms of accounts payable, accounts receivables, who do you owe and who owes you. So if you operate on a credit system whereby maybe you tell your supplier, I'll be paying you after 30 days, it needs to be reflected in your financial system. If you give goods on credit, it needs to reflect. And nowadays we have very good systems to help you track. Even a pay bill can help you track as you start. But as you progress, you need to consider having a proper system in place, especially for taxing purposes, so that when it's tax time, I believe right now we are approaching the deadline for filing your taxes, and this is where your a financial management system is very important for you to file your taxes for the business on time and appropriately. And then I said expenses, which includes the bills you pay. And to highlight on expenses, you need, as an entrepreneur, you need to put yourself on salary. It doesn't come right away, but as you progress, make it a habit to put yourself on salary so that you don't end up mixing business finance with personal finance. And this has been one of the main reasons why most startups fail within the first 3 to 5 years because the entrepreneur ends up mixing finances that were meant to be channeled back to business. They use it for personal issues because they don't have a salary. Being an entrepreneur doesn't mean that you don't have a system of paying yourself. Then again, under expenses, you have the bills that you need to pay, maybe advertising and marketing, all that. Then you have investments. Now, this one is as a business, when your business makes profit, always ensure you invest part of the profit. You could be asking, why should I invest? Apart from channeling part of this profit back to the business, ensure you invest it, because when you invest business money, when you don't have money to run the business, you can easily convert that investment to give you cash flow. Example, when the pandemic hit, there are some companies that did not have cash flow because of lack of sales. So such companies, if they had an investment, they quickly converted it into, they liquidated the investment to be able to get money to continue running the business. Then we go to the next, the other one is profits. Now, your system needs to reflect profit. And profit is basically calculated after you remove your expenses. So if your business made 100,000 this month and your expenses maybe were 80,000, you subtract and you say you have 20,000 profit. Now out of this 20,000 profit, you now you can call that your profit, and then you can now channel it back to the business, and another percentage you can use it to invest, and then another one you can use it to bless yourself, you can use it to even bless your employees. Like if you really made a good sale, it's good to always motivate your employees and even motivate yourself. Don't forget yourself. Always focus on motivating yourself as well. Again, I'd also want to highlight your system needs to showcase cost analysis, which is a feature that takes a close look at where you're spending money and analyze procurement. I've met entrepreneurs who come to Financial Wellness Center. We do a consultancy for them, and they tell you, I see customers coming to my business, but I don't see any money. If I match the customers who buy from us and the money in our account, we just don't understand it. And when you ask the person, do you track your costs? And then they're like, no, we don't. So it's important for you to track your costs. As much as possible, have a budget for the business. Budgeting is not just for your personal finance. Now we go to the next to our next segment, and before we can talk about cash flow, what is cash flow? I will talk about cash flow management, but what is cash flow? You can write it down in the chat box. Let me know, what is cash flow to you? Just say something about cash flow. What is it? Or if you've never heard of it, just say, okay, I don't know what that is, and we can go ahead. Now, as you continue to type it, I would just like to say, a healthy cash flow with a healthy cash flow, you are able to pay debts on time, you are able to sustain your operations and expand your business. You can have cash flow, but it's not healthy. You know that? You can have an unhealthy cash flow, and that means that expenses are higher than the income that is coming to the business. So in case you find that your cash flow is always operating under a negative, the business cannot pay itself, you are always borrowing to do something, to even pay salary, then we can say you are operating and an unhealthy cash flow. Now, cash flow basically means money coming in and money going out. As we can see on the screen, we say cash flow includes money, analysis, asset, rate of return, measurement, business, accounting, investment. I always say view cash flow as a tap. Now, when you open the tap, water flows out. Now, the tap in this case is your business. When you open your business, using other business dynamics, customers come, they buy your goods, so you get money, and then you use that money to maybe restock, to pay bills, and even do other things. So when it comes to cash flow management, what does it mean? Because we've heard about cash flow, and of course in business world we always say cash is king. If you do not have cash, you will suffer. You will find yourself, sometimes you even lose customers, because if I don't have enough money to restock, my customers, if they come all the time and I tell them, okay, I don't have this item, they'll definitely go to the other person who is my competitor. So over a period of time, if my cash flow is operating under negative, I'm gonna lose my market share. Losing your market share means you're losing your customers, and this will definitely lead to closure of your business. Now, how do you get to manage cash flow so that you maintain cash as well as be able to maintain your market share? Now, I'll start by saying cash flow management is a set of practices and strategies to help you track and analyze and improve the financials of your business. The goal of cash flow management is to get you in the green, which you also say the positive cash flow, where you have more money coming in than going out. As I mentioned earlier, anytime you find yourself, you're operating under a negative, money is just going out, and compared to the money coming in, the money that's going out is more, then you are operating under a negative cash flow. Now, you need to always ensure you are operating under a positive cash flow. Now, managing your financials well is important if you want to keep your business afloat. And it's even crucial if you have plans of growing and expanding your brand. Now, when you have cash afloat, you are able to predict and plan shortages and surplus. So if I have cash and I know, okay, in the month of July, I don't make sales. So what will I do? I will reserve the cash to be able to cater for expenses that will come in July. Now, if I have my cash afloat and I notice that, okay, come September, I do make more sales. This takes us back to financial management software that helps you to project. Now, you will reinvest, you will start buying your stock early so that when it comes to September, you are able to make the kill on time. Now, a successful cash flow involves three elements, that is accounts receivables, that is what you are owed by the customer, and then we have accounts payable, what you owe to suppliers, and shortfalls. This is the amount of money you owe that exceeds your available funds. It's critical that one element doesn't overtake the others. If your clients owe you too much, then you won't have enough money coming in. And this is where, as a business person, you have to be very, very strict. Don't be this person who, if anyone just says, okay, can you just lend me your products, then you just give them. You need to put your business first, because remember, cash is king. And when you give on credit, virtually speaking, you don't have the money. So it's important for you to find ways in which you can have more money coming in than going out, or you operating under a negative cash flow. So we're gonna talk on what are the tips for effective cash flow management? Now, there are two main tips that improve your cash flow. And the first one is increasing the amount of incoming money and reducing the amount of outgoing money. Now, it's always recommended, don't be very comfortable operating under debt, especially for a startup company, because sometimes it takes time for your business to break even. And sometimes, like when the pandemic came, it came as a surprise to many startups. So imagine if you could have taken a debt to start a business and you didn't have a plan on how to have a cash flow management system, chances are high you were affected tremendously. So the first tip of effective cash flow management is know how much you need to break even. For any business, it's important to know how much do I need to earn so that I can simply break even. If you go over the break-even point, you are doing something right. So sometimes you can say, okay, my business needs 100,000 to be able to break even. Break even means the business is able to pay its expenses and pay the employees and even pay you, as well as be able to restock itself and give you more profits for investing. So you need to find out how much do I need to break even, and this should be indicated in your business plan so that you have a goal on, okay, I need to, within 6 months I need to be at this place and I need to do this so that I can be able to break even. Now, the secret to entrepreneurial success, it's not more profit, but it's how you manage your cash flow. You may be having profits, but if your cash flow is not well managed, then you may not be able to see the business growing. Then the second tip is have an emergency cash reserve. An emergency cash reserve is very important for your business. We are so used to having an emergency fund for our personal finances. How about for your business? What happens when you don't make sales for a whole month, yet you have bills to pay? You have employees to pay. The emergency cash reserve steps in and caters for that. I usually say at least ensure you have a 3 to 6 months emergency cash reserve saved in an account that is easily accessible and very flexible. And then we have the third one is set invoice timelines and terms. If you're going to give someone your goods or services on credit, have a set invoicing terms. This could be they need to pay within 15 days, they need to pay within 30 days, they need to pay within 60 days, and ensure there is a system whereby if they fail to pay, what happens. I also say if you're dealing with a big project, it's always recommended to take a deposit, and then when you progress to a certain deliverable, you can again ask the person to pay some more money. This one makes you to be safeguarded so that you don't find yourself running on a negative just because you want to complete a heavy project. Then the fourth thing is encourage easy, early payments, drive sales with incentives or promotions. One way to manage your cash flow is make it easy. If your customers want to pay via PayBill, create one. Make it easy for them. Sometimes a customer doesn't want to come to your shop, so they want to pay online. Open an online payment system. And another way you can manage your cash flow is early payments. How do you do early payments? Just as I mentioned, make people give you deposits, especially for online businesses that deal with delivering products. Don't send your product to someone and they've not given you a deposit. So, and you can encourage early payments by running promotions whereby you tell a customer, if you are going to prepay in advance, you'll get this discount, maybe 10% discount if you're going to prepay in advance. But if you're going to pay upon arrival, there is no discount. That way, basically, you've played with the psychology of the customer, and they will definitely go for the prepaid package, and will make money that way. Then drive sales with incentives and promotions. One way to drive your sales is, if you have employees, please ensure you always give them something. It could be a commission or something, just to make them have the motivation to make more sales. You see, if I know my salary is maybe 5,000 per month, I don't have to do anything else. But if I'm told, if you're going to increase the sales maybe by 20%, 2% is yours, definitely this employee will definitely work hard to get the commission, and this will result to me as the business owner getting more money. As well, do promotions. Promote your business, promote your services. Anywhere you go, talk about it. I loved the fact that our moderator, when we started, she encouraged us to share in the chat box what we do. And some people didn't even say anything. They didn't even promote their business. They just said, I'm so and so from this. If you're in business, you need to say, I'm so and so, this is my business. Always promote what you are offering. Again, another way to make your customers give you more money, introduce a loyalty program whereby you have a card, maybe a gold, silver, platinum, and you tell them, if you're a platinum member, you will get maybe free delivery. And being a platinum member requires you to be a purchaser of our items maybe weekly, or you have to purchase items for this much per week. Basically, you will get money, and it has to be more than what than the bait you offer to them. Now, the last one is do bookkeeping. Bookkeeping is very, very important for you to know to manage your cash flow effectively. You need to track your cash. You need to know, where is this cash going? How are we getting the cash? How are we utilizing it? And as well, find out ways that you can have a system or get an accountant to help you know. But if you're still on the startup stage, you can do it on your own. You can start with an Excel sheet, then go to, as I mentioned earlier, we have simple tools like the FreshBooks that is very affordable and very easy to maneuver through. Again, in bookkeeping, you also need to focus on reducing your expenses so that you can have more money coming in, what most companies call cost-cutting management. So ensure you find out ways to reduce your expenses, as well as clear out your inventory. One way to clear out your inventory is introducing sale offers. If you can see, there's this supermarket, Carrefour, they are always having a clearance sale. Basically, what they are doing, it's not really a clearance sale. They're just pushing the goods that they feel they are taking too slow to be sold, and they need to have cash flow at that time. So they introduce a clearance sale, and more people buy, and they get cash to be flowing, or they get to have a cash flow going on in their business. Now, with that said, that's all about cash flow. Meanwhile, I would encourage you, if you have any question, if you have any clarification that you need, feel free to be writing in the chat box, and we shall be working on it or answering it towards the end of the session. We go to our next part, which is business growth strategies. But before we can dive in, I would want to know, which markets does your business serve currently? You can just write there if it's Nairobi, if it's Mombasa. If you do not have a business yet, you can just say the business you're intending to start, this is the market you think they can serve. And as well, which markets would you like to serve in the future? so that as we continue to find out what is business growth strategy. So knowing your market as a business person is important. Knowing who you're serving is very important. And knowing your market is a whole it's a whole concept that as an entrepreneur you need to find out. And knowing your market means you know the preferences of your customers, and this could even be in terms of their age, in terms of their locality, where they are all the time. If they are physical customers, you need to have a physical shop. If they are always online, you need to be online with them. If they are customers who are between maybe 18 to 35, then you need to customize your advertisements to be something that is attractive to an 18-year-old so that they can be interested in what you offer. So that is basically knowing your market. Now, when it comes to business growth strategies, I'm gonna deal with 4 segments, and then we can move forward. So the first one is market penetration. Now, market penetration seeks to increase sales of existing products or services on existing markets. So for example, I want to increase my sales in my markets. For example, maybe my market is Nairobi. What I'll do is I will find a way of increasing my sales in Nairobi. One way to do that is by reducing my prices. If I usually sell a product for 1,000, I'll just sell it at 800, and I will sell more quantities. But don't underprice your products. When you underprice your products, it makes the customer skeptical because they tend to think maybe it's not good quality. However, reduce the price, but not too much. Or if you need to increase, don't increase extremely, unless you're going to remodel or redefine the product. Then another way to increase your sales is distribution support, and this is free delivery. You can tell the customer, if you buy from me, you are going to get a free delivery from my company. Definitely, who doesn't want to work with their hands free? It makes the customer feel appreciated, and they want to buy more from you because they know after all they will deliver. Another way to increase your sales is increasing your promotions or adverts. You can advertise more, find out channels that can work for your business. And as Pastor Ken mentioned, you can use Google My Business as a platform for you to advertise your product. Again, another way you can increase is acquisition of your rival in the same market. So if your rival is, for example, Safaricom might decide to buy Airtel so that they can take all the customers from Airtel to be under Safaricom so that they can increase their market penetration. Now we go to the next strategy, which is market development. Now this means increasing sales of existing products in new and explored markets. Market penetration, you focus on increasing sales of existing products or services on existing markets to increase your market share. And this could be done by reducing your price. It can also be done by increasing your promotions or adverts, and as well as doing distribution support or acquiring your rival. Then we go to the next strategy, which is market development, which means you are going to increase sales of your existing products in a new market. So you have the same product, maybe you're selling shoes and your market currently is Nairobi, but you want to sell your shoes in Mombasa. So what you can do is either start a branch in Mombasa or go online with a focus of a demography that is in Mombasa. Now you advertise only to people in Mombasa, and then come up with a way in which people can get their goods delivered to them without having to come to Nairobi. And that is actually what Uber did. Uber started in the USA, but now it's in Africa. So they did market development. So they are able to serve Africa, but they are operating from United States of America. So as well, another way you can create market development is through loyalty programs to segment clients. So maybe you notice that, okay, I want to have high-end clients as well as I want to serve the normal clients. You realize high-end clients want maybe more personalized kind of services. So you can say, okay, if you want to get this personalized service, you can become our platinum member. And that is basically what happens with flights or with the airline industry. We have business class, we have first class, we have economy class. Basically what they are doing, they are developing their market so that they don't miss out on this customer who wants to travel in business class, but at the same time they want to serve the economy class customer, but they are in the same plane. It's not that business class will fly in a different plane. Then product development, as I mentioned, product development, it's more of redefining your products. Sometimes it could just be branding, nothing else, or just changing the shape of the casing that you're offering. Or sometimes it could even be adding an additional thing. I saw like there's this cooking oil that they added a lid that helps you to pour oil without it pouring on the surface. So they're just redefining their products so that you can prefer them over their rival who doesn't have a cap or a lid that prevents the oil from pouring on the surface. Basically, that is product development, and it is a growth strategy because people will buy when they see there is a modification. I also said with the 5G program, we have 3G, 4G, and then it's developed 5G. Now people are going to buy 5G not because the 3G is not working, maybe it doesn't just work better as compared to the 5G network or something like that. Now we go to the other one is diversification. Now diversification, as I said, it's the only free lunch in business and in finance. This is where you diversify the products you offer. And an example is in Financial Wellness Center. We realize that our customers who come to consult with us for business, they do not understand most of the business models that can help them be preferred, become a preferred brand. So we introduced Entrepreneurs Academy, and by introducing an Entrepreneurs Academy, we diversified from our services that we offer, but still within the same umbrella, what we call concentric diversification. But you can also diversify and offer a product that you feel people want it more. For example, if I'm selling for vegetables in a very populated estate, and now with the COVID, everyone has to wear a mask. What do? I just introduced selling masks as well. I have diversified. I'm still selling my products, but there's another one that I've added. Another thing I saw is like Uber was basically a taxi business, but they diversified and got into Uber Eats. So they, apart from being a taxi business, they also deliver good food. So that is as well, that is diversification. And the good thing with diversification, it helps grow your business to markets that you could not have gotten had you not ventured into that business. So with that said, those are the business growth strategies that can help you as an entrepreneur to scale up your business, coupled up with what my fellow guest, Mr. Job Njeru, mentioned earlier on. So This brings me to the end of today's presentation. And if you have any question, feel free to write in the chat box. If you need any clarification, you may as well write in the chat box. Meanwhile, you can reach out to us on email. That is info@financialwellnesscenter.co.ke. It's reflecting on the screen. As well as you can contact us on WhatsApp. That is +254 702 091970. Don't forget to follow our social media accounts, that is on Facebook, Twitter, Instagram, Financial Wellness Center, and our YouTube channel, which is Financial Wellness with Sheila Mboga, where we get to upload videos every week, as well as post a show every Wednesday at 9:30 p.m. in East African time, where we get to discuss more about business and financial management. So until then, my name is Sheila Mboga, and I give back the meeting to our amazing moderator, Miss Nyakinwa. Thank you.